So here's something I find very concerning with insurance. Now, this is specific to pet insurance that just happened, but it just is a good thing to know about insurers in general and how they think and kind of how really evil they can be. So just got a letter telling us, hey, good news. We're increasing your cost on your insurance by just a little bit. Your premium's just going up a little bit, but you're getting way more coverage. And even more good news, you don't have to even sign anything. You, by paying your first monthly bill, have agreed to the terms and conditions of this new plan. What is the plan? Well, looking into it, I'm like, this kind of sounds weird, right? This new plan is actually the equivalent of a sports betting parlay. So let me explain. So like with pet insurance, you'll usually find that they'll have a maximum amount for the year that they're willing to pay out, right? So in the case of my cat who has cancer, it was $7,500. That's the most that they'll pay out. And they're contacting us. They're like, hey, good news. We're actually going to pay out a total of at least $20,000. And you're just going to pay us a little bit more every month for that. Well, here's the thing, though, is they've actually broken it into pieces, just like you would with a sports betting parlay. So a parlay, if you don't know, is where instead of just betting like the team will win or lose, you also roll into your bet things like, well, I think the team's going to win and the quarterback's going to throw at least this much yardage, and I think they're going to make at least 2 field goals, and I think there'll be at least 1 touchdown. And your thought process might be, oh, well, if the team wins, there's also a good chance that they have field goals and there's a good chance that the quarterback is doing well. But they call parlays a sucker's bet because you're adding all these new conditions to your bet and makes it much less likely that you're going to win. So they're doing this with the insurer. What they're saying is what we're going to do is we're going to give you up to $5,000 for illness, and we'll give you up to $5,000 for accidents, and we'll give you up to $5,000 for hereditary illness, and we'll give you up to $5,000 for like joint things. So that means, though, that you actually have less coverage, say, under illness, where it used to be $7,500. Now it's only $5,000, but they're going to tell you that, oh, but you're getting way more coverage. But the fact of the matter is what is the chance that your pet is going to have an illness need and a broken leg and a hereditary issue and a joint issue, right? They're betting you're not going to have all of those. And what's weird is if you say, well, you know what? I don't think that my cat doesn't have a hereditary thing. Let me take that off. It doesn't really reduce your costs any. We looked at it and it reduced the cost by $2 per year to remove $5,000 worth of coverage. So what they're really doing is charging you more, offering to pay less for the thing you're most likely to need, something like an illness, right? They're going to cover less of that. And then if you try and reduce the amount of coverage you have because you don't need it, well, they're not going to reduce the cost for you in any significant way anyways. And they know that they're much less likely to have to pay it out, but you're going to pay them more for less.